Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. The midterms now out of the way, and sort of quite interesting results really. Not really sort of a blue wave, more a bit of a ripple really. The Democrats managed to win back control of the House. But interesting, in the Senate, they actually lost a little bit of control, and the Republicans actually strengthened their majority there. Trump has obviously come out claiming a victory. Sort of quite interesting because not really quite a victory. They've lost control of the House, which certainly, was probably always going to happen. But very interesting, he has come out and said now he's looking forward to bipartisan sort of cooperation over the next sort of 2 years of his presidency. Certainly the US markets like that and sort of rallied pretty hard on the back of it. Obviously the big worry was that the Democrats would get control of the House and the Senate, and then it will be very hard for Trump to get any of his policies through. So now the midterms are out of the way, we start focusing again on potentially the big deals out there, which is really obviously trade and sort of China, and really got to sort of sort that out. You've got the Iran sanctions started to kick in. Iran has sort of come back and said, they're not really going to be too worried about them. It's not going to affect them. Certainly it is. And obviously the state of the US economy, which at the moment is still very strong. The latest jobs data was very encouraging, was still a strong number out there. And also quite interesting as well, you started to see a little bit of wage increases as well, sort of pushing that inflation figure up a little bit. But what is quite interesting, obviously with the market backing up in the US now, S&P forward price earnings ratios are back to around sort of 14, 15 now, which historically is well below the average for the last sort of 10, 15 years. So given that on the valuation and the market backing up a little bit and still got a very strong economy, you still expect the Fed to probably look to increase in December, data dependent, and then probably a couple more times in 2019. So it looks like the Fed won't have to pause now on that interest rate hike. So that is all data dependent. But at the moment, they say the economy looks in pretty good shape. You've got the midterms out of the way, and it's just a question now just seeing how the market sort of takes that. But certainly, President Trump seems to be saying all the right things at the moment. Certainly at the moment, all the factors seem to be in place for a year-end rally going in for equities. It's quite interesting as well, obviously, with all the recent volatility. S&P is still up for the year, and also the Dow is still up for the year as well. Interesting, oil has sort of backed up considerably now. It's back through sort of 65 bucks on WTI. Sort of very interesting, obviously, with the Iran sanctions starting to kick in. That was expected to sort of maybe cause a few little disruptions in the supply chain and potentially sort of push oil a little bit higher. Now, that hasn't been the case, so it'll just be interesting to see how it trades into year end. Just on Brexit, it's quite interesting. You've seen ex-PM Tony Blair coming out and say potentially Brexit could be stopped. Not quite sure how that's going to happen, but he sort of raised the issue. And again, there does appear to be a growing sort of level of unrest in the UK with a lot of people who voted for Brexit. Now with the realisation coming through of what it actually means and the implications for it, I was saying, well, hold on, I don't think we actually voted for that. Well, unfortunately you did, but it looks like you just didn't understand what you were voting for at the time. And now the realisation's coming through and all of a sudden you don't like it. Here in New Zealand, quite interesting. Back just before the GFC, the OCR was 8.25. Currently, it's 1.75. The Reserve Bank has said that they're not looking to increase rates now for at least the next sort of 12, potentially 18 months. So the interest rate's pretty low. It is quite sort of tough out there, especially for people looking for income. Potentially a couple of bond offers out there with Chorus and Fonterra. Fonterra is looking like a 7-year deal. Potentially the rate is going to be around sort of 3.9 to 4, maybe just a little bit below that. If that's obviously fixed for the next 7 years, that just gives you a clear indication of where interest rates are and potentially the sort of income options available over the next sort of 3 to 4 years. Now, obviously, if you are looking for the options, there are plenty of alternatives out there to the sort of fixed interest that is being offered. And if you're interested in discussing what is available, say call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. And we look forward to speaking to you soon.